This month, the crypto industry has had a serious credibility crisis because of the crashing of TerraUSD, which is attached to US dollars, and Luna. The plummet from these two events bankrupted many investors in just a few days, sending the chaotic cryptocurrency market into a tailspin. Previously, USD was just meant to always be worth $1, but it has fallen to as low as 13 cents and then to 9 cents this week. This crash led to a huge backlash from angry investors against the founder and CEO of Terra blockchain, Is Kwon. For today's video, exclusive to our crypto clippers, we will be talking about the recent cryptocurrency crash relating to TerraUSD and its co-founder, Is Kwon. So without further ado, let's get into the video. Who is Is Kwon? Is Kwon, a South Korean entrepreneur, called the cryptocurrency he created in 2018 his greatest invention. In countless tweets and interviews, he trumpeted the world-changing potential of the currency Luna, rallying a band of investors and supporters he proudly referred to as lunatics. He is the creator of TerraUSD and its native token Luna. However, many believed Mr. Kwon only created this project to take advantage of the hype and promote a project without strong groundings in place. While the South Korean graduated from Stanford University with a degree in computer science, he always carries himself with confidence. Nevertheless, he has been especially critical of his competitors and detractors on social media. He has criticized investors for putting their money into rival stablecoin projects, as well as lashing out at anyone who questioned his credentials. "Bow before the king," he said in the tweet. Aside from that, Is Kwon has also called USD and Luna naysayers poor, adding, "I don't debate the poor." He even gloated on social media. In April, he announced that he had named his newborn daughter Luna, tweeting, "My dearest creation named after my greatest invention." The dramatic story of the Terra crash, which some have called the Lehman Brothers of crypto, has taken yet another remarkable turn. Legal documents revealed that the two South Korean offices were closed and the Terraform Labs Korea Corporation dissolved in days leading up to the dual currency collapse. Initially reported by South Korean news outlet Digital Today, the information obtained from the country's Supreme Court Registry Office highlight that Is Kwon successfully instigated the liquidation of two branches and an entire company. The Busan and Seoul offices were both shut down, with dissolution that took place on April 30 and actioning of the plans being completed on May 4 and May 6. The timing of these decisions has raised suspicions within the crypto community due to their potential correlation to the events compromising the financial obliteration of Terra and USD stablecoin during the early hours of May 10. Terra is currently in the process of making revisions to its system. If passed, this would enact three changes: increase Genesis liquidity from 15% to 30%, implement a profile for Luna holders based on pre-attack conditions, and decrease funds to USD holders based on post-attack conditions. In the proposition paper, the author Is Kwon stated that a network launch is slated for May 27, with the USD peg failure being like Terra's DAO hack moment where they can rise up anew. There is a significant increase in investment funds for crypto projects built with the currency. This technology raises questions about its technological underpinnings. Mr. Kwon's company Terraform Labs has raised more than $200 million from investment firms to fund crypto projects. Luna's total value ballooned to more than $40 billion and created a frenzy of excitement that swept up day traders, startup founders, and wealthy investors. Last week, Luna and the currency that Mr. Kwon developed, TerraUSD, had a spectacular collapse. Their meltdown had a domino effect on the cryptocurrency market, which tanked the price of Bitcoin and accelerated the loss of $300 billion across the crypto economy. This week, Luna remained close to zero, while TerraUSD continued to slide. This one is an example of crypto hype, the Luna and TerraUSD cryptocurrency. It is actually being researched for its impact on financial products. Mr. Kwon's project was backed by respected financiers, and when it came crashing down, these investors sold their Luna and TerraUSD coins early, reaping substantial profits. Now retail traders are unable to access these coins because of the devastating losses caused by the prices of these coins plummeting. Now, Do Kwon is facing legal prosecution following the crash of his much-publicized pet project Terra Luna. 5 crypto investors that are based in South Korea have filed criminal complaints against him and his Terraform co-founder Daniel Shin, alleging fraud and violations of financial regulations. Do Kwon is also reportedly facing a tax fine of $78 million for evading corporate and income tax payments. While Do Kwon could be accused of mismanaging his project and having reckless social behavior, it is highly unlikely that he would serve any jail time following the criminal complaints, because there isn't sufficient proof to show what he did was a fraud. It was market forces at play. At most, Do Kwon is likely to suffer a major loss in reputation unless evidence of wrongdoing surfaces. Terraform Labs has spent 4 years building its startup ecosystem and is currently connecting it to other blockchains. However, earlier this month, Terraform Labs experienced things beginning to unravel. When the peg of TerraUSD was lost, more than $1 million were wiped out in a few days. The currency that used to have a redeemable for $1 guarantee is now trading for just 5 cents. And Luna, its governance token, which had a market cap of $30 billion last month, has dropped to $680 million. Terraform Labs was founded in January by businessman Do Kwon and Daniel Shin. Within 3 months of its foundation, the company was registered as a private limited share company in Singapore. The company behind it all got its start in 2018. By August of the same year, Terraform had completed a $32 million raise that included TransLink Capital, Polychain Capital, FBG Capital, Hashed, 1KX, Kinetic Capital, and Arrington XRP. 4 of the largest crypto exchanges, Binance, OKEx, Huobi Capital, and Dunamu, invested in Terra's Layer 0 blockchain as well. Terra wanted to compete with Alipay and PayPal by getting more companies to use their payment system. Shin, the founder of the Korean e-commerce giant Tmon, helped Terra to start the Terra Alliance, which has about 20 other companies using their payment system. At the beginning of 2019, Terra was able to raise $62 million with an initial coin offering for its Luna governance token at 80 cents per Luna. The team said it would be part of a dual token system, which is composed of Terra, the stablecoin, and Luna, the collateral token. The slide deck that accompanied the ICO claimed the safety net in the form of Terra Stability Reserve, which protects against speculative and regulatory risks while still giving token holders access to liquidity. And exactly 1 year after Terraform Labs was registered in Singapore, the company has launched Mainnet Columbus on April 24, 2019. There are 3 tools that have been created with the launch of the blockchain: a block explorer, a staking dashboard, and a registrar for pre-sale investors to create wallets and manage their Luna tokens. The Terra Stability Mechanism was launched on the same day that a YouTube video went up about it. The creator of the video, Do Kwon, said the simulation is done to make sure that changes in variables like inflation and GDP don't cause Terra's instability. One of the big draws of the Terra ecosystem was the Anchor Lending Protocol, which launched in July 2020. It was touted as the eventual gold standard for passive income on the blockchain. Before its demise, Anchor promised lenders annual percentage yields of nearly 20%. Its total value locked swelled to $17 billion, about 70% of all value in the Terra ecosystem. The year Anchor was launched, investors who borrowed cryptocurrency from the Maker protocol had just found out they were not being serviced. The Maker token, created by MakerDAO, is used as a collateral on the DAI stablecoin. They have a credit protocol that loans someone money that locks up their asset like Ethereum with their Maker token. During the Black Thursday, the tokens for Ethereum dropped below $100 and caused most DAI loans to become uncollateralized. When this happened, the protocol automatically put ETH up for auction. However, the network was so congested because of high gas prices that some bidders were able to get assets for the shockingly low price of $0. That meant people who had put up Ethereum to lock down their loans had lost everything. Investment firms are using keeper systems to manage risk in the financial market. This can lead to liquidity runs when there is high volatility. These investments result in huge losses for borrowers and potential liquidity crunches. In a recent blog post, Nicholas Platius listed these risks as one of the 3 sources of risk that have been increasing since July 2016. He linked to a Reddit post from a user who had lost 281 ETH. Platius discusses the differences between liquidation and collateralized contracts. Liquidation contracts work by quickly getting rid of any increased risk in the market, while collateralized contracts have a longer withdrawal period to provide stability in temporary shocks. This crash left Anchor with USD and AVAX, Avalanche native token, with just $100 million. Terra made good on the promise of their stablecoin by launching it in September 2020. This includes a promise not to take any fees from its users. It is only dependent on ETH at this time. But less than a year later, it was facing strong macroeconomic headwinds. China has cracked down on Bitcoin miners, and as a result, USD has lost its dollar peg in May of 2021. Terra's algorithmic stablecoin lost its dollar peg and traded at 95 cents for 2 days, according to CoinMarketCap. Eventually, the downfall of Terra would happen and be so catastrophic. The final parts in place were joining the Wormhole blockchain and Council Cosmos IBC in October 2021, which finally allowed users to move their funds onto the blockchain from others. The day following Terra's announcement of their Wormhole project on their blog, the total value locked jumped above $5 billion for the first time. By the time Terra joined IBC, there was $2 billion worth of USD in circulation, and its ecosystem had more than $9 billion worth of assets. Do Kwon has accumulated Bitcoin as an investment reserve wallet and says he hopes to eventually have $10 billion worth of Bitcoin backing USD. It's not $10 billion today. As USD money supplies grows, a portion of the seigniorage will go to build BTC reserves bridged to the Terra chain. He said on a tweet in March, "We have 3 billion funds ready to seed this reserve, but the technical infrastructure is still not ready yet." The Bitcoin prices had grown to 42.5 BTC, worth $1.4 billion, before Terra Lunas couldn't keep their dollar peg due to Bitcoin's price decrease. But when the Bitcoin price started to tank, USD lost its peg and would eventually drag Luna, the Terraform Labs team, and thousands of investors down with it. Major investors in Mr. Kwon's company have lost money. Changpeng Zhao, the CEO of crypto exchange Binance, said his company bought $3 million of Luna, which grew to value of more than $1.6 billion. But Binance never sold its tokens. Its Luna holdings are currently worth less than $3,000. The losses are drop in the bucket for the Binance United States, which is valued at approximately $4.5 billion. Most of the VCs have the analysts they need to assess these things, Mr. Nichols said. They may have figured they could cash out on the backs of retail. Many of the effects felt by the collapse have been on traders, who are seeing their money dwindle and are turning to suicide hotlines. In one Reddit post, Luna and TerraUSD followers shared lists of suicide hotline resources. The crash has also devastated the startups being created by entrepreneurs who work in crypto infrastructure but are tied to the design set by Mr. Kwon. Neil Somani, 24, quit his job as a quantitative researcher at Citadel, a hedge fund, in February to work on a project that connected Luna's underlying blockchain to Ethereum, another crypto system. In April, Mr. Somani joined a Chicago incubator for the month of Terraform Labs and its investors, designing to incubate projects built on Mr. Kwon's technology. Within a few weeks, he had lined up $10 million in commitments in venture funding that valued his project at $65 million, and he was close to hiring 3 employees and had 40 customers excited about the idea. It initially seemed like Luna and TerraUSD could find their footing, but by the end of last week, the developers said it was over. Somani felt relieved that he hadn't taken money from investors for the risky project. He lost roughly $20,000 on Luna and had made other gambles that have turned a profit. In the past few weeks, there is a Telegram group that works on funding, re-community building, and salvaging. It has close to 200 members, and they have been discussing how to strategically move forward in the face of recent chaos. Somani was not worried about the current feast and famine mentality. He thinks that his mentality comes naturally for crypto builders, and that's what attracted him to the community. Mr. Somani plans to pitch his now out-of-date technology in a less crowded competition at the $50,000 Hacker House prize event. He said that most other teams had left the program, which made him hopeful for victory. There you have our crypto clip video for today. Do you think the crypto co-founder intentionally crashed the crypto? Let us know in the comments below. Don't forget to subscribe to our channel, click the notification bell, and like this video. If you think that we have delivered value, please share this video with one person. Just one share is enough for you to show your appreciation for the commitment and hard work we all put together in creating this video that teaches and helps you on your mission of building your own fortune. And you don't know that one share could go a long way. Keep in mind that no matter how many times you're going to watch this video, you won't see any results unless you take action. Goodbye and see you at the next one.